Earlier this week, Mark Zuckerberg showed off the latest prototypes for virtual reality. And while a lot of it looks pretty cool, investors are wondering, well, wait a second, are you just creating solutions to a problem that folks don't really have? And so in this video, we're going to talk about the latest products, these virtual reality products that Mark Zuckerberg was talking about in terms of what's going to get launched by Meta and what is going on with Meta stock price. It has gotten crushed this year. And where do I think it could potentially go in the future? What do I think of the current price in business? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. So let's dive right in to understand what's going on. So earlier this week, Mark Zuckerberg, founder of Meta, formerly Facebook, META is the ticker. He unveiled several different prototypes, 4 different virtual reality prototypes. And this was picked up by the major media, outlets calling out like, wow, you're tackling a lot of interesting problems, but none of these products are ready to ship. And so that was a bit disappointing, saying, hey, the revolutionary product isn't here yet, but hey, wow, you're dealing with a lot of challenges. And here's literally a whole wall of different prototypes to deal with some of these challenges. One of these challenges is retinal resolution. Do you want a pixelated solution, or do you want something that's so realistic that you feel like you're actually there? And if you're actually there, well, how do you deal with depth perception? This perception that you're actually there, that things, get a little blurrier the further away they are versus look really clear up close. And how do you deal with the optical distortions that a lot of folks have experienced using various different VR or even AR sets, where it just sort of becomes cumbersome and you can give you a headache and you don't enjoy it after a while? How do you remove these distortions so that the software moves so quickly with what you're seeing so that there is no lag perception? And I think the prototype that Zuckerberg was most excited to talk about was the Holocake 2. He only mentioned it very briefly as using holographic technology, saying, look how thin this is getting, and this is the direction of the future that we want to be heading into. And so it is a question, look, there's a lot of cool stuff here. Could this be the potential of, living in the Matrix in the future? And Wall Street says, yeah, that might be cool, but you're still spending $10 billion this year alone on the research and development for this virtual reality. You have pretty much unfinished headsets, so not really new products to show for it. Yes, Oculus has been selling, but these are just prototypes. These are custom and bespoke models. This isn't the revolutionary change yet. You're not seeing the mass adoption. It's a little too early on. And the stock has also gotten hammered because you've seen, Zuckerberg's number 2 in command, Sheryl Sandberg, leaving Meta, leaning out of the company. And then I've also called out how you're facing a broader bear market, potential recession. I think the odds of a recession are very, very high, particularly with the Federal Reserve tightening. And that, of course, is going to impact an advertising driven business model like Meta, which is still 95% plus advertising revenue. And so not surprising to see when you factor in all these different components, a huge cash investment, 10 billion plus in products that Wall Street's sort of skeptical on, concerns about a recession, concerns about, hey, leadership leaving, and you see a stock price down over 50%. So the question is, where does Meta stock go from here? What are my thoughts? First, a quick plug where if you're looking to take charge of your investment journey, consider unrivaledinvesting.com, where you'll get actionable insights on unrivaled companies. We also have a community of fellow investors that you can learn and share with. I also share my own personal journey for those interested in following along. In full disclosure, I do own some Meta stock. It's not a big position, but I do own it, and I've called out sort of my thesis for owning it in previous videos. But a quick summary of, especially now with the stock price, meeting new 52-week lows or around that, you have around a $430 billion market value for Meta stock. This is against $45 billion in, I'd argue, free cash flow or net income tied to their family of apps. That is net income, that is after tax tied to their family of apps. And so looking at that alone, you're saying this is trading under 10 times earnings for these apps that include Facebook, Instagram, WhatsApp, talking about billions of users. Are these users leaving the app? And so it's a question of, well, what's going to happen to advertising revenue? Where's sort of the business model going? And then you factor in that they have 50 billion plus in cash and investments. So that means net of their cash and investments, and Wall Street's saying, yeah, this core family of apps is only valued at 8 times earnings, which strikes me as super duper cheap. So now I want to share my personal unrivaled investing insights just for you. So a few quick thoughts. When you see a stock trading at 8 times earnings, effectively, like that's when you're backing out the cash and just looking at that one core segment, this means Wall Street is giving them zero credit for all this $10 billion virtual reality bet. Wall Street is saying, yeah, we're concerned that $45 billion in, let's say, net income tied to that family of apps, there's going to be a recession, advertising revenue is going to get hit. So that's also a concern, saying, hey, how far can it drop? I'd say a third component is this concern that Zuckerberg is sort of this tyrant and he gets to decide what's going to happen to the free cash flow of the business. And look, that's true. He does run the business. He is the founder, and he sort of has this tyrannical approach, like, hey, this is how I want to do things. And the challenge is like, yeah, is it possible about $50 billion in free cash flow will get allocated away from shareholders? So in other words, what Wall Street's saying is, we're concerned about the macro. We're also concerned, with a recession and potential advertising budgets, but we're also concerned about the micro, where how are you spending your money? Is this just a big money pit where we're not actually going to see an attractive return on investment? Or will you ever return any of this capital to us? Now, they have been picking up their buybacks, and so that is nice to see. But once again, that macro concern could sort of really harm their profits, and they've effectively penciled out flat growth recently. So I'm looking at this and I'm saying this is very, very cheap. If they're able to continue at this base level of profitability, let's say for the years to come, giving them no credit for future growth, which I think could be a conservative assumption, given that generally ad budgets increase with inflation over time. If you're able to effectively keep that flat at around 45 billion, blended over the next 5 years, assume there's a recession, assume it picks up, so assume zero growth and they're buying back stock, that could be the equivalent of buying back 12% a year going forward based on this current valuation. Now, that is quite interesting, because it's like, well, wait a second, is this company still going to be around 10 years from now? If you're buying back 10% a year and it stays at this valuation, that could result in a nice, return. You're getting a minimum 10% return if they keep up that buyback and they keep up that free cash flow. And then if you have some sort of valuation expansion or even some growth, then you could be looking at high teens or even 20s, percent returns. So this is a very interesting setup. I'm personally, thinking about, okay, what do I want to see, for them? What are the actions that I want to see before I consider making it a bigger position? Because I do own some now. I'm just trying to figure out, okay, it's clearly cheap, but it is tied to the economy. When do I make that big bet? So I'm going to think about that some more, and I'll call out some more of those thoughts to the Unrivaled Investing subscribers. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thank you so much for tuning in.